Great day. And in today's video, what I want to do is talk about how much money should a business hold for emergencies. So I hope you're having a great day. And just remember, if you find this video useful, like, share, and follow, and subscribe. And also, if you want a bit more advice or have a discussion about the finances in your business or the general direction of your business, please make sure to book yourself in for a strategy session with myself. So I'll get into it. A business needs to have emergency funds in its bank account. So that's most people know this, and like a lot of business owners I come across, they do keep something in their company bank account. So they typically don't spend all of their money. They'll set aside enough for their taxes. They'll set aside enough to pay employees and suppliers, and then they'll also set aside a certain amount of money for emergencies. So this is something I want to cover today. There's quite a good book. It's called Profit First by a guy called Mike Michalowicz, and he actually does go into this a bit because, it's part of the profit first principle. You've got to be paying yourself, and because you're paying yourself, you've also got to know how much to pay yourself. And a lot of the time, if you pay yourself, you've got to make sure that you haven't paid yourself so much that there is no money left over in the bank afterwards. So what Mike Michalowicz says is, firstly, always be aware of what your tax bills are and what your other working capital requirements are. Working capital, by that I mean paying staff, paying suppliers, getting your marketing sorted. But what Mike Michalowicz says is, okay, once you've got enough money in your bank account to cover all your taxes and your working capital requirements for the foreseeable future, what you also need to do is keep money in your account to cover emergencies. And Mike Michalowicz, what he actually says is the amount of money that you should keep in your business is 3 months worth of overheads. So if you work it out, like, your premises, your staff, or your maybe not necessarily all your marketing costs, but some of your marketing costs and any other running costs of your business, let's say they come to 20 grand a month. Mike Michalowicz recommends that you hold 3 months worth of that, so £60,000 in your bank account for emergencies, and then on top of that, you need all the money that you set aside to cover your tax bills and any other commitments. So the reason I wanted to talk about this is, firstly, before COVID, that would have sounded like overkill. Like, no one could have expected lockdowns and shutdowns. So that emergency money, it's there for unforeseen expenditures and issues. But what it's also there for is, if something does go completely wrong, like COVID, what it's there to give your business some breathing room, so you can actually reconfigure the business and adapt the business to the new world order. So that's one of the main things that money is there for. So it's not just to cover unforeseen costs. It's there to give you, it's your oxygen supply. If something goes completely wrong in your industry or in the world, and you actually need some time to be able to change your business so it's still relevant to those changes. And one of the things, though, I believe Mike has, definitely post-COVID, I believe Mike's definitely got it right in that sense. One of the things I would always say, though, is that's just a really generic rule of thumb that he's worked out. But what you could also do is you should also build like a contingency plan for your business. So if you said, okay, well, if half my sales disappeared overnight, what would I need to do to make the business profitable again? So that's another way to look at it. So Mike just says 3 months worth of your overheads. But if you wanted to put a bit more thought into how much money you should actually hold in the bank account, then the starting point of that is creating a contingency plan for what happens if something went severely wrong. And part of that is, like, what costs would you have to cut? What kind of marketing would you have to do to bring the new type of revenue in, or bring more revenue in? So and how long would that marketing take to pay off, and how long would those costs take to cut? And if you've got a good understanding of that, then you can also base your emergency funds in your business around that understanding. So there's two kind of ways to really do it. You can actually work it out based on your contingency plan, and or you can just take Mike McCalloch's blanket figure of 3 months times your overheads. So it's definitely worth thinking about how much money your business should hold for emergencies, because obviously if it doesn't hold enough, then that's going to impact your survivability in the case of another COVID or another life-changing event like that. But the other side of it is your business can have too much money in the bank. There's two things I mean by that, right? Firstly, you can physically have too much money in the bank where you are not covered by the financial services compensation scheme. So I think it's 85,000 that's the limit, and at which point you need multiple bank accounts with different banks. But the other side of it as well is, if you've got too much money in your bank, that represents a lost opportunity. You could have invested that money in the growth of your business. You could have brought in new members of the team. You could have spent the money on marketing. And if you're, so I do come across business owners sometimes where they've just got too much money in the bank because they're too afraid of everything going wrong and the bottom falling out of the market and the sky falling. It's just, there are some people, and sometimes the amount of money a business holds, it can also be a psychological issue as well. But I can't really go into that because I'm not particularly qualified. But what I can say is, like, if you've got too much money in the bank, then you've got to think about investing it, or you've got to think about taking it out and spending it, or putting it into pensions or into some other kind of personal savings, because ultimately that money, if you don't want to invest it, that's your money. Obviously, there's tax efficient ways to take it out, so that's definitely worth having a conversation with a good accountant like ourselves. So what I'd like to do is, I'd like to invite you once again to a free strategy meeting. We can help you understand the current value of your business. We can help you understand what the value could be with a few improvements, and we can talk about. We can help you, give you targets for bank balances. We can give you targets for cash flows, all that kind of stuff that makes a business healthy and gives it healthy finances. So take me up on that offer, please. But otherwise, I'll see you at the next video, and have a great day.